What's going on, everyone? My name is Dee Dee.
I'm Tramel.
And tonight we're going to come to you talking about trading plan.
This is where it gets down and dirty. This is how you're going to start making your money.
So now that you learned the strategy, no matter if it's naked trading, SK5, Bollinger Band, Stochastic, it's now time to be able to come to the charts and make your own money on your own time. You can copy and paste, that's all good, but the only way you're going to become wealthy is by being able to utilize these skills to your advantage at your own time. So that's where making a trading plan comes into place. So first and foremost, based on your level of understanding, you need to choose one currency pair to study and love on now that you're starting to trade on your own. Why should they use a person?
So basically, you want to study this one pair because you want to know when it's moving up. You need to know when it's moving down. You need to know if it's in an uptrend. You need to know if it's in a downtrend. You need to know if it's in a pullback. See, all these reasons, you can't study 5 pairs and know what every last one of them doing, right? This is just like your girlfriend or your boyfriend, you only want to have one of those because you can't tend to all of those. You can't give every last one of them individuals your attention, right? So you need to study this pair, make it your baby, love it, know when it's in an uptrend, know when it's in a downtrend, know when it's in a pullback, when it's a great entry, when it's consolidating, right? If it's consolidating, you're not getting in. You're not getting in. And the second step, you want to know what type of trader you is. You want to know if you're a scalper. You want to know if you're a day trader. You want to know if you're a swing trader, intermediate term, long-term trader. But mostly we are
intraday traders.
Yeah. So we trade in the day and we exit that day, unless we hold trades for a day or two. We hold dates.
But for the most part, our team, we are intraday traders. Most of us enter and exit trades within the same day. So as Tramel said, that was perfect. When you choose that one pair, I know a lot of people say, so which pair should I choose? You can Google best currency pair for beginners or things of that nature. But this is the most important part. So, we all got our own lives. We got our own priorities. We do our own things throughout the day. And trading is to help you be financially free. And so because the market is open 24 hours for 5 days a week, you're able to trade on your own time. So say you go to work from 9 to 5. That's cool. That's fine and dandy. But you can choose any time after you get off work, whether it's if you wake up in the middle of the night for the London session, you're doing an Asia session in the evening, you choose which time of day that you trade, right? So whichever time of day that you trade, whatever session that is that matches up to it, that's how you determine which currency pair that you're going to use. Not which one, but which pairs that matches the session that you choose. So say you say, all right, I'll work 9 to 5. I'm going to take a nap when I get home from work, and I'm going to wake up 3 o'clock in the morning for the London session, right? You can Google best currency pairs for London session, best currency pairs for whichever session that you choose to trade that's based on you. And with that being said, most currency pairs that match the economy is what you should choose. So if you're in a London session, it's best to choose European, either Euro or GBP pairs. If you're trading during the New York session, it's best to choose USD pairs. If you're in the Asian session, it's best to choose JPY, things that match these sessions, currency pairs that match these sessions. Of course, currencies, they move all throughout the day, but they move faster when they match the session that they go together with. So in addition to the date, the currency pair, love on it, the strategy, you also do not have to trade every single day. The banks, the major market participants, they don't trade every single day. You can choose the time of days that you trade also. So if you say, okay, I'm going to only trade Monday, Wednesday, and Friday, make sure you stick to that during those sessions, during that one pair that you got to love on. You want to be a disciplined and an organized trader as well. So after you choose your strategy, your pair, the time of day, and the days that you're going to trade, that's when you want to start writing down all your trades. You write it down. You get a notebook. You write down your strategy, your plan, the days, right? But in addition to that, you also want to know, so let me show you something really quick. You want to explain that one, True?
So you want to have a trading journal, and you want to write down all your trades. You want to know all your profits. You want to know all your stop losses. I mean, all your losses that hit your stop loss. When you in these trades, do not be scared for it to hit your stop loss. If it hit your stop loss, then guess what? That's your homework. You want to know why it hit your stop loss. You need to go see what type of candlesticks formed for it to hit your stop loss, and for the reason why, to see the reason why it was a wrong mistake to get in that trade. So you want to see if it's a win of L. You want to see if it's a W, then you'll make a profit. If it's a L, then it hit your stop loss. Let it hit your stop loss. Take that L on the chin, right?
You're gonna lose some trades.
You're gonna lose trades, but you want to have more blues than reds. That's all it is. More blues than reds. More blue screens than red screens, right? So you'll put your balance right here. You'll put your pair, GU, that's GBP USD, and you put the lot size you've been trading off of, right? And you'll put the entry price. For example, you would have seen the entry price you enter, and the entry price is on your MetaTrader 4. It's always going to be the left number on the side. That is your entry price. And then your take profit, you would put your take profit. How many pips was it? 150 pips. And then your stop loss, see if it was 50 pips. You was willing to lose 50 pips. That was ratio 1 to 3. And if you want, $15, right? And you want to write this down. So print this out, please. Print this out. You want to know, like Didi saying, you want to know why you got in this trade. You want to write that down. You want to know why you got in this trade. If it had any news, you want to write that down, jot that down. Like, okay, this is news came out. Pay attention to that. You just want to make this trading journal, or like jotting down these notes as a diary. You want to study the market. Okay, it did this at this certain time. It created engulfing at 5 o'clock in the morning. Okay, now I'm expecting it to drop. This is the reason why I got in this trade. Boom, you write down this trade. I didn't enter GU, and I'm getting in for a sell. If it hits your take profit, guess what? You're gonna put the profit. You're gonna put the W. You're gonna put the profit. And if it don't hit your take profit, and it hit your stop loss, you're gonna put the L. And you're gonna go back. That's your homework over the weekends. You want to go back and look at the trades you enter in over the week, and study it and see why it hit your stop loss, or was that a good trade you got in, or was it a bad trade you got in?
And so that what he's speaking of is called back testing. You're going to scroll back to the point that you enter the market and look at what happened if you did lose a trade. So we have your trading journal, and as we always tell you, get a notebook and a binder. I show people this all the time. This is my binder that I use. Although we teach the team, so my binder is a bit bigger, I print out a lot of things and resources so I can access them easier. And I also have a trading journal. You can have that trading journal for your trades, but you also want to have like a discipline write down, which we explain. So I always write my strategy. I write which plan I have. So how many pips I'm going to catch this week? What's my monetary or my pip goal for the week? So if I put 100, right? Say I'm here to catch 100 pips this week, and I trade 4 days a week, Monday, Tuesday, Wednesday, and Thursday. That means I need to be catching 25 pips a week. Why? 25, 50, 75, 100. My week will consist of 100 pips. So I put 100 pips a week. The times and day I trade. So I put Monday, London session, 25 pips. Tuesday, Asian session, 25 pips. Wednesday, London session, 25 pips. Thursday, London, 25 pips. Really detailed. Then I put the pair that I'm looking for, that I'm studying. You're one pair as a new trader. And then I also do my strategy checklist. Exactly each step. I'm a naked trader, so I put number 1, check news. Number 2, trend line on day chart. Number 3, switch to line graph support and resistance on day chart. Number 4, switch to 4-hour chart and draw support and resistance. Look for you write down. Don't use the same. Write it down every Sunday. If you start your trading week, when you mark your charts up when the market is closed, write it down every time, because when you write things, you start to remember it. It becomes repetitive. And I want you to write it down because under pressure, you may skip a step. But if you have it written down, you can literally look at it and check it next to it. Like, okay, I did that. Okay, I did that. Okay, I did that. So treat it like a job, and it will pay you like a job. Some people say, I don't have time. You have time what you want to have time for. A lot of people work. Even if you're not trading, get some education in 1 hour before work, 1 hour after work. Even if you're not trading your pair, watch it. Say during the day, even though I wasn't trading, write it down. It shot up when this news came out. It's consolidating during the day. You can get to know the ins and outs. It's birthday, like it's your boyfriend or your girlfriend. You know the ins and outs of so you have a trading journal and you notate everything that you have. So that's where we go with pick a pair, pick a strategy. Proper risk management is our next topic. Proper risk management. That's what your lot size is. We talked about this in basic. We can just show you a little bit here. But we also want to put you guys on a compound interest plan. So a lot of people here try to hit the lotto overnight. And as we tell you all the time, trading is more about longevity. You need to chase the skill, not the money, because the skill is what pays the bills. The skill is what's going to bring the people. The skill is what's going to bring the money. The skill is how you're going to get rich, not chasing the money. So yes, you can make $200 in one trade, but you can also lose that same $200 tomorrow if you're not disciplined. So I want y'all to be in the habit of a compound interest plan. And what that means is growing your account and using the proper lot sizes based on the size of your account. That way you can use bigger lot sizes once you grow your account. Growth, not fast wins. Because if you're comfortable with making small wins, it's going to become easier and easier to have those $1,000 days, to have those $100 days. So what compound interest is you make amount one day, the next day you make another amount, but together collectively you're still growing it. So today, and it helps practice discipline as well. Let me show you an example that you can screenshot this. This is if you start with a $100 account, for example. Your first trade, you use a 0.03, either on one trade or on 3 different trades at a 0.01. You know, that's triple trading. Your TP, 25 pips for the day, as we said. And you only need to be making $7.50. Some people would never be happy with $7.50 because they think you have to have big wins. No, $7.50 is fine. You can screenshot this. You can write it out. You can print it. You can ask us to send it. So yes, you started with $100 and you made $7.50 profit, but now you got $107.50. That's better than no money or losing. So the next day, once you meet your daily goal, you need to get out the market. Stop chasing it. Don't get greedy. It's about financial freedom. Use your free time for something else. The second day, your lot size is a 0.05. You can put on one trade or a couple trades, as long as it equals 0.05 for the day. Your TP is 25 pips. Today, you made $12.50. That sounds like nothing. But in addition to what you made yesterday, that's $120 that you did not have. So be comfortable with growing your account. And by day 20, if you stay disciplined, you can have $1,270 as opposed to winning money, a lot of money in one day and blowing it the same week. It doesn't make sense to over leverage on 5 trades and blow it all on 6 trades. You have anything to add, Ron?
Yeah, so make sure you screenshot this. And if I was you, I'd put this on the wall. Just to see that compound interest work. You know, if you want to make withdrawals every week, then you can. But in another account, start growing your account little by little and, you know, see a build up off of this compound interest. And guess what? You make a big withdrawal. Like, let's say if you get on the compound interest plan to making $100,000, you know, that big withdrawal going to be lovely. Look, week 20, $15,000.
So this is another one that we have. It's tailored for beginners. As you can see, instead of day, it goes by week. And so for those who don't know, and this kind of matches what I just said, it goes by 100 pip weeks. So of course you got to divide it accordingly per days that you trade, like I told you all, but you'll only be using a 0.05 lot size the first week. And you'll start off with 100, you'll have $50. $150 the first week, $250 the second week, so on and so forth. So by the 20th week of trading, you can have 15,000 and you're able to increase your lot size because your account increases as well. So practice discipline. Be comfortable with making small profits because it's going to inevitably turn into big profits with proper risk management, discipline, consistency, and positivity. Let me make sure that's all I had. And I don't want you making a trading plan or a strategy for fun. I don't want you creating a trading plan or a strategy for fun. I want you to actually utilize it. A lot of people create these and don't stick to them or abide by them. And so I don't want you to create a trading plan for fun. You have anything to add, man?
That'd be all. Just make sure, write down your why.
Affirmations, perfect.
Write down your why, your goals, what you're trying to accomplish. Like, are you trying to retire your moms? Are you, trying to do this for your baby? Are you trying to have this as a trust fund, for your baby? Are you trying to fund another businesses? So write down your whys, print them out on your walls. And honestly, this is your trading plan, and print everything out on your wall. Follow the steps, follow the blueprint, and you will succeed. And that'll be all for me.
That's perfect. So as he said, write down some affirmations, something to keep you motivated. Get into your trading groove. Turn on your favorite song, your favorite music before you trade. Get in the right mindset. Because if you come to the charts with a negative mindset, you're going to have a negative results. But if you come with positivity and thinking that, and knowing and having faith that you can succeed, you will inevitably succeed. So I hope that was helpful. I hope these calls serve you well. And if you have any questions, feel free to reach out to us, and feel free to enjoy your trading journey. So I'm Dee Dee.
I'm Tramel.
And y'all have a good one.